Good morning, traders. All right, I'll start off with an apology on this one. I meant to post this on Sunday. Life got in the way. Kids, puppies, usual stuff. Weekend was crazy, but no matter, we'll get this review up now. And I will be making some further trades this afternoon, so I'll do another video later for this week's trades, as I've had a few good ones close out in week 40, which we'll go through in a minute. Week 40 is also the end of September, so I'm going to do a brief overview from a kind of bird's eye view of the account of how many trades I did in September and what the overall profit or loss was. So hang around to the end of the video and you'll see how my September went. Right, we'll start with the usual look at the last week of the wider market. So the SPY has continued its huge uptrend, making new highs, which is obviously brilliant for selling cash secured puts on SPY-based companies. You can see it's followed pretty much the 20-day moving average all the way since the April tariff piece, and has been consistently making new highs, which is just what we like to see, reflected in the VIX. Low volatility, but not ridiculously low, so we still are getting some decent premiums on the options, but we're not into the world of whipsawing stock prices all over the place and getting assigned left, right and centre. Pretty much this is what I would call a sweet spot for trading in a bull market. So over onto the portfolio, let's have a quick look. So that's what the portfolio looks like at the end of the week. So you'll notice there's a few tickers from last week missing. They closed out for a decent profit, which was fantastic. So we'll have a look through what happened and go from there. Let's go back the way. There we go. All right. So this is a review of week 40 of 2025. And we'll start with UPST. One of my higher volatility plays, along with HIMS. Which makes rolling really easy, as we saw last week when I rolled this down from the 60 strike, which that was a good bit of support for a long while, but broke down through it September the 25th and has found a new home at the moment around the kind of the 52, 51, 53 area, which corresponds with what we kind of see going back here in terms of resistance and supports levels. Plenty of time in this one, 24th of October. Don't intend on doing anything at the moment. It's pretty volatile, so there's no reason it can't just randomly jump up again above the strike before then. If it doesn't and it continues in this channel, I'll easily be able to roll that down and out again into November for a juicy profit. If it does break down towards the 45 mark before 24th of October, I'll roll it sooner. I'm happy with how that one's progressing. The cost basis on that one is around about 53, so in a pretty good place on that one at the moment. What is the cost base? I think it's like 53.40 I think is the cost basis on this one, so we're a bit lower than that at the moment, but not ridiculously so. It's not running away with me at the moment. Soxal. So you'll remember a couple of weeks ago I increased my covered call strike prices as Soxal continued to rise. I paid for that by increasing these put strike prices down below here for a profit, which paid for the debit for rolling out and up the covered calls. And not surprising, this is a semiconductor 3 times leveraged ETF. We've had a few big announcements in that area last week or so. So Soxal is on an absolute tear upwards. It's way above my cost basis, and it's reaching the point where I was, of the second set of shares I was assigned back in 2024. So what am I going to do with this one? Well, I'm going to I'm going to keep a closer eye on it, and I'm going to roll those covered calls up, and I'll pay for that by rolling those puts up again. I'm reluctant to go any further out in time. We're already into February for the covered calls and May for the puts next year. So I may well accept a debit for a roll up here, as long as the debit is less than half of the increase that I get in terms of capital gains. So if I'm rolling up $1, I ain't paying any more than 50 cents type rule. I mean, it is starting to look oversold, but who knows? It looks like the pre-market price, you can see there, 42.48. It's already higher than the close of yesterday. So yeah, I think this is going to keep going up. I'm not at all concerned about early assignment and locking in losses or anything like that. The extrinsic value on these covered calls is still huge. So we got plenty of time to play with this, and it might get into the point where I'm just rolling $1 at a time up. I'm very close to my cost basis, so that's excellent, but I'm not having traded Soxal for a year for nothing, so I will keep rolling that up as the price goes, hopefully getting above a second lot of shares that was assigned, and then the lofty goal will be get right back up to the 50 mark where I was first assigned. Yeah, so not doing anything immediately, but we'll continue to watch that one. PayPal. Let's pull this out a bit so we can get a bit of detail here. So PayPal, yes, I had the 70 call that expired worthless last Friday. Just gone, you can see that candle here. That expired that closed at 68.93. I had the 70 call. I'm not a fan of letting options expire. I tend to close them out if only for a couple of cents. So that's what I did with this one. I closed this out for a couple of cents, and then I sold another covered call at the 71 level, which was here. And then yesterday, you can see PayPal had a nice little pop and went straight up through that covered call. So rolled it up again yesterday to 72, managed to do that for a credit, 15 cents. So for the two, what are you doing? Oh, there we go. For the two covered calls, for the whole roll in total, it was 57 cents for the 100 shares. So $57, nice profit for that one. Plan for this one is hopefully PayPal will continue going up, and I'll just keep rolling up those cover calls until I get them back up to where I was assigned at 74. I'm selling above my cost base. I'm selling covered calls above my cost basis here, which takes into account the cost of the protected put I bought all those weeks ago. So whatever happens here, I'm in a profit, as long as PayPal doesn't decide to go to zero. This was an experiment. I was playing around with calendar spreads, and it's fine. It'll end profitably, but calendar spreads are just a bunch of work I don't need, so I'm going to go back to the pure wheel. Because in a calendar spread, it starts as a debit, and then you sell against your protected put every week, and eventually you recover that cost and then some. So I prefer to start in a credit. That's just my style. Okay, so PayPal's progressing quite nicely. NU, so this is my long-term leap. So as I said yesterday, last week and the previous weeks, I am looking for a bit of a pullback to start selling cash secure puts on NU again to nibble away at the price of the leap, and that's what we've got. So we've had a bit of a drop here, and it's looking like for today, depending on how it opens, I could probably sell 14.5 cash secured puts again, which puts me below the 50-day moving average. It looks like the 20-day moving average is being a bit of support, although yesterday it bumped its head up and didn't get above the 20-day moving average, so that might become resistance. We might end up bouncing around here. What's today? Today's 15.41 pre-market. Yeah, still below the 20-day moving average. So ideally, I'd be quite happy selling 14.50 cash secure puts, which looking back the way 1450, back here for the last layers of support and resistance. So we'll see what happens today. It might be one I take. If I do, I'll put another video later. But still, overall happy. I mean, my leap is down at 8, so we're still very much in profit on the leap for NU. HPE next. So HPE, again, I'm not going to be doing anything with that. Lots of extrinsic value I need to be eaten away on my covered calls. I'm slowly nipping away at rolling those covered calls up to my cost basis and then hopefully beyond. But that's going to be a long-term trade. If you remember, this is the one I converted the stock into leaps to free up 50% of the capital for other trades. No change for HPE for this week. HPE itself is bouncing up against new resistance up here at the 25 area. Be awesome if HPE could take another drop. Whether it will or not, who knows. If it does, it might allow me to do something sooner than I've got planned with those covered calls. If not, then we'll just wait to the end of the year, into January, and we'll roll them up another $1 and another $1 until we're above my cost basis and then into pure profit. So nothing I'll be doing with HPE this week. HIMS. So HIMS is the other high volatility play I've got going on at the moment. That's just progressing nicely. I've removed my 50% take profit order on HIMS now. I didn't get a jump, so this will just be a trade that continues. We've had a few drops and increases. Looks like it's starting to follow the 50-day moving average quite closely. Drop, rise, drop, rise, drop. Rise yesterday, looks like pre-market 54, 57. Yep, don't intend on doing anything with HIMS. We've got a few weeks left on that one to run. I'll keep looking at the available profit to time remaining in the trade, and if it looks like it's getting I'm getting a good percentage return, I'll take it. But at the moment, I'm just going to keep monitoring that one. NVO, our good friend NVO. So after a brief flirtation below my strike price, we've since had a good jump and we are now comfortably above it. There's two ways of looking at NVO at the moment. Long-term downtrend. We are very reactive to the 100-day moving average by the look of it. We keep getting near it and then dropping. A little flirt above it, drop. Bumped our head on it, rather big drop through earnings, and it looks like we're coming back up to test it again. We failed it, and we're heading back up there. Yesterday was a very, very small red day. Might be looking for a drift off again today. Shorter term, if you take the lows of 6th of August, we are in a bit of a shorter term uptrend, I think is fair to say. So we are just going to keep monitoring that one. Don't intend on doing anything with it. I'm not rolling it. No way near to being able to take any kind of profit. So that's another one just to let run its course. Keep an eye on. Pan American Silver Corp. So this was a good trade last week. You'll have seen when I flicked over to the portfolio, that's no longer in it. That's because yesterday, on the green candle yesterday, I hit my profit target, my early profit target. So this trade was open for 14 days. And I got, what did I get out of that? I got $80 out of a premium of 120 in 14 days. So 66% in under half the time needed for the trade, which works out at a 29.8% return annualized. So I decided to take that off the table yesterday. Well, it was an automated take profit that I'd set, which activated. So PAS, great trade, and that's freed up some capital for some more trades today. SoFi. SoFi. So SoFi has had a bit of a pullback, which is fine. Some profit taking after its huge run up. It's touched the 50-day moving average, and yesterday was a green day coming off that. Pre-market, it was quite a jump. Pre-market were up 27.34. So we were in danger of coming below the 26 strike I've got, but it looks like we're coming out of the danger zone. So far I would not have minded being assigned at 26, so I'm happy either way with that. Careful earnings is coming up just after my expiry date, so hopefully we'll have a nice run up into earnings and we can get out of this trade before then with a full profit. I'll keep an eye on that one. AES. AES was a fantastic trade. So if you remember from my last video, I opened this one on Tuesday the 30th of September. I had my usual 50% take profit. The very next day, for whatever reason, a huge jump up, and yeah, I was out of that trade for 50% within, I think it was about 8 hours of market time, which has to be a record for me for a trade. Sometimes you get lucky in these things, and this was one of those times. If I annualize that up with the amount of time I was in the trade, it's something ridiculous, like 365% annualized. Yeah, of course it was 1%, 50% of the premium. So yeah, if only every trade could be like that. So that's some more cash freed up for trading today, new positions. So that's where we are with the whole portfolio at the end of week 40, 2025. I did promise that we would have a wider look at how September went in total. So I've downloaded my transactions from Tasty Trade for the month. 41 trades in total, as you can see down here. Premium generated $1,408.85. Those 41 trades were a total of 59 contracts in all, options contracts. After fees, commissions and whatnot, that's a clear profit in September of $1,367.45. Was helped by ClearSpark. I was able to sell that at a profit. It's called away. I had covered calls on it that were $3 above where my covered calls were. So that was a $300 profit capital gain there, which was excellent. So I am very happy with September. You need a bit of context, I guess. So my account is 50k at the moment, so it's a healthy percentage return on a month's worth of trading. If I can replicate that every month, I will be a happy bunny, as they say. So yeah, I'll be making more trades later this afternoon, depending nothing crazy happens in the market after open, and I'll put up a new video later on for this week's trades. Probably be NU, because I really do want to chip away at the cost of the leap, which just increases the base profit on the overall trade, and that will leave me with some further cash to have a look at some other candidates. All right, stay healthy, stay profitable, and I will catch you in the next video.